Hello and welcome to Conservative ETF Investor and this week's episode for the stock market update, June 25th, 2017. I am your host. My name is Ken, and here we are on the home page of Conservative ETF Investor. And once this video is done, I'll upload the link to it right here. Also, you'll be able to get it on the YouTube channel right at the bottom. There'll be a link as well to come here to our home to the website. Right on the home page, scrolling down, we have our current ETF recommendations that have just been updated as of yesterday. And we are still, our current posture is still on hold recommendations for everything. The stock market has not broken down. It is, as they say, made of Teflon at this point in time. We have updated our dividends, so the dividend amount has gone up a little bit, and all the information that you want to see about all of our positions, including our transaction buy dates, what the symbol is, as well as the price on the transaction, the current closing price, how much profit or loss we have in each of the positions. I like the percentage column rather than the dollar sign column. So in the S&P 500, we're up 15%. The NASDAQ 100, which is QQQ, up 42%. IWM, which is the Russell 2000 small caps, up 19%. VEU, all world excluding United States, up 15%. Treasury bonds, symbol TLT, up 9%. Real estate investment trust, which is your real estate portfolio, symbol VNQ, is up 9.39%. And Goldfinger 007 is up 8.96%. And if you come over to our Portfolio Ideas tab, it will give you our recommended portfolio allocations, 20% for the S&P, 10% for the NASDAQ, 10% for the small cap Russell 2000, 15% for the all world excluding the United States, 25% in bonds, 15% in real estate, and 5% in precious metals and gold. Okay, there's some ideas about your portfolio right there. At end of the more page, we do have our disclaimer. So when you you can read that. And I'll just go over here to our current recommendations page. And again, it's the same thing that it is on the home page, just has its own tab here as well. Our portfolio, since our buy dates, has gone up a total of 15%. We did a mock-up of a $100,000 portfolio. So the portfolio since inception is up $115,000. And our year-to-date portfolio, which is just for 2017, is up, 8.49% for year-to-date. All right, so that goes over all of our positions and where we stand. And here, we're going to jump right to the charts. Our first chart that we look at is the S&P 500. The symbol is SPY right there. We use the, let me get rid of that inspect mode. We use the weekly charts for our charting purposes over a 5-year time horizon. These are candlestick charts. Each one of these sticks that looks like a candlestick represents 1 week in time duration. We have been in an upper trading channel for the S&P 500 for some time, and we're still in that channel, and it's rising towards the upper end of that channel. Last week's gain was 0.2%. Coming down to our momentum indicators, let me come down here. This one here on the bottom, underneath the chart is the MACD, which is the moving average convergence divergence set at default settings. And we were at an extremely high level here, and we have since backed off, but we're still technically at a high level. The MACD is above its signal line, so the black line is above the signal line, which is generally overall bullish, but you can see that they're both running parallel to one another. It's pretty flat at the moment. Underneath that, we use the slow stochastics at default settings, and right now the slow stow is below its signal line, but it's still above 80. So it's bearish that it's below its signal line, but it's bullish because it's above 80. So it's in a bullish pattern. And you can tell by the chart, look at that. It's just gone straight up week after week after week after week. It's a very impressive resiliency, the S&P 500. Let's move on to the next one. The next one is the NASDAQ 100, which is the symbol QQQ. And here, oh, again, I've got that inspect mode. Let me get rid of that. Um, Here you can see that we were in a rising trend channel. The NASDAQ was stronger than the S&P 500, and it broke up above it decisively on this day right here. And it has still stayed above it and has not come back down into it. So it's still more bullish than the S&P 500, although it has backed off of its highs a little bit. If you come over here into the thumbnail, you can see where we had a high point there, and that was it for the NASDAQ. And then it came down, but it's popped back up. On the momentum indicators, you can see that the MACD is topped, came back down, but did not cross its signal line and is now running parallel to the signal line. Although the slow stochastics has fallen below its signal line and is now currently below 80. That is a suggestion that this is going to come down and at least test this upper support line. At one point, that line was a resistance line. When the ETF was trading in between these two channels, this was a resistance line. But when it broke up above it, which once was resistance, will now act as support. So this is expected to come down and show some sign of support here. And depending upon how resilient this market is, it's either going to hold support and bounce and go higher, or it's going to break through support and come into this trend channel. But judging from the momentum indicators, excuse me, we should at least see it come down and hit the support level, this upper support level right here. That's the NASDAQ 100 symbol QQQ. Let's move on to the next chart. The next chart is going to be IWM. This is a Russell 2000. Small cap stocks, we are using the same chart, which is weekly charts right there based off of a 5-year time horizon. Here, the Russell 2000, which gained 0.51% for the week, is trading in an upper trend channel at the lower support level of the channel. So it's considered the weakest of the three ETFs that we've just looked at, from the large cap to the technology to now the small cap. But it's hugging that support line. You can see how it's just hugging that support line and just trading right along with it there. It's not breaking down, but it's not breaking up towards the upper end either. On a high basis, it's actually pretty close to its highs if you look at the overall highs. So it's still holding up very strong. Now on the momentum indicators, you can see that the MACD was at a very high point for the Russell 2000, but it has since softened dramatically. It's currently at 2.5. It's below its signal line, and it has been below its signal line for quite some time. Tried to come up, penetrate above the signal line, but didn't have enough momentum in order to do so, so has since gone parallel and is still riding just below it. You can see it clearly here in the thumbnail. As far as the slow stochastics indicator goes, we did come up, come down, come back up. We're above its signal line, and it's currently above 80 at 80.99. So it's got some momentum on its side. Everything is just showing really good strength, really good resiliency. All right, let's move on to our next one after IWM. That's going to be VEU. VEU is the Vanguard All-World Excluding United States ETF. We at Conservative ETF Investors are conservative, and we want a diversified portfolio. That is why, if you come back over to our homepage, we track 7 ETFs based over 5 different markets. We've got the equity markets of the United States, the equity markets across the world. We have bonds, real estate, and precious metals. Okay, that's our diversification. Now let's look at the chart. Okay, the chart pattern for VEU, which lost 0.09% for last week, was in a rising wedge pattern, broke up above it, and it had a topping resistance. So this is a tops line right here, resistive line. But then the momentum was so strong that it broke up above that, and it is still riding above this line right here, which was resistance, is now support, as well as this upper resistance line, which now is acting as support. And since off of its highs, has since backed off, but still riding above this, which is bullish. The MACD has topped and has started to curl down and is traveling to break towards its signal line. We'll see what happens with this ETF to determine whether or not this is going to come back down or break down or exactly what it's going to do. But right now it's showing all signs of bullishness. The slow stochastics is below its signal line, but it is above 80. So it's mixed signals there, but still signs of strength. So the ETF is not breaking down. So all signs of strength. We're on hold recommendations, as you know, for all of our recommendations. Current posture is on hold for everything. So that's where we get that. Okay. After VEU, the next one in line that we want to check out is TLT, which is treasuries. These are 20-year treasury bonds, and the symbol is TLT. You can see that right there. It's a bond ETF. We prefer that you actually buy individual bonds as opposed to buying a bond fund. So this way you don't have to deal with the volatility of a bond fund. But I can't track individual bonds for purposes of this portfolio. So we track a bond fund and we use TLT as our tool to do so. Bonds had a reasonably good week, up 1.13% for the week. You can see that we had a double bottom here on this ETF. After that double bottom, it has done nothing but a little bit of hiccup right there and just gone through and up. We had a declining tops trend line, broke up above that, and its next resistive line is going to be this tops line that was met sometime in 2015, and to see how we're going to fare against that. But we are traveling up towards that resistance line right now. MACD clearly on its side, riding above its signal line and above zero, bullish and bullish. Slow stochastics is above 80 and it is above its signal line, bullish and bullish. All the signs are there that it's going to come up and test this resistance line, and we'll see what happens to this ETF once it does that. That's TLT treasuries. Our next one is real estate. We use the Vanguard. We love Vanguard here at Conservative ETF Investors. And here is the real estate investment trust. So you have a real estate portfolio in your a real estate position in your portfolio. The dividend yield is currently 4.38%, which is not too shabby. Had a flat week, up 0.02% for the week. Now the chart pattern on the ETF, you can see we've gone up, down, and now we're rising back up. There's a declining tops resistance line, and we are right on it. And it has broken down in the past, and we'll see if it has enough momentum to break up or break down at this point in time. The momentum indicators, MACD is above its signal line, but you can see how choppy this has all been. Same with the slow stochastics, choppy. And you can see it here in the chart pattern, all choppy. So there's a lot of back and forth going on with this ETF. No clear, decisive, long-lasting trends for any duration of time. but you do have a reasonably good dividend. This is our actually best paying dividend ETF in the portfolio, 4.38%. Moving on to the next one, gold. Gold does not pay a dividend. This is the gold spiders. Symbol is GLD. Again, weekly chart, 5-year time horizon. Gold has been in a downtrending market for years. You can see that gold has had a declining tops trend line right here. It's lasted a number of years. Right now, it tried to break up above it. Let me see if I can get over here in the thumbnail. Tried to break up above it, failed, produced a shooting star type pattern, and has backed off. So again, another failure of trying to break out and stay closed above this declining tops trend line. So gold right now is coming back down. Now we have two support lines that we can watch. There's a short-term support line right here that I drew in, and there's this more higher support line just above 115. And then I see a lot of support coming in at about 113. Our buy point is at 109.61 on December 30th, 2016, when the slow stochastics and MACD were bottoming and then coming up. So we are still on a hold recommendation on this ETF, and we'll see what it's going to do. Now we're going to look at our volatility indicators. We use two of them. The first one that we're going to look at is the VIX. Now the chart pattern on this is slightly different. This is the VIX index. It is a volatility index for the S&P 500. We use a daily chart, not a weekly like we did on the other charts, and we use a 1-year time horizon for our time horizon. Right now for the S&P 500, this is an inverse index, meaning that as this index goes up, the S&P 500 goes down. I have the S&P 500 down here at the bottom. You can see as this comes down, this index goes up. As this index comes down, the ETF goes up. So it acts inversely to the chart, to your price. Right now, the index is, I've got two moving averages, the two exponential moving averages, the 50 and the 200. The faster moving average is the blue, the slower moving average is the red. The blue is below the red, and the index is below the blue and the red. All of these things are bullish for the S&P 500. The only cause for concern is that we are riding at the lowest levels we've been in a long time. And when you're at the lowest levels and you can't go any lower, then the next thing to do is to go higher. And when that happens, the ETF price comes down. So we do expect some type of softening at some point in time for the S&P 500. It's just a matter of when. The only thing we don't know is when. All right, but that's it for the VIX. Now we move on to the next indicator, which is the VXN. The VXN tracks the volatility index for the NASDAQ 100. So here's the NASDAQ volatility index. Now it works the same way as the VIX, where it's an inverse index. Now you can see here in the chart pattern of the index, we have the index is now trading above its 50-day and 200-day exponential moving average, although it has softened up and it's riding just above its 200-day. The 50-day has come up, but it hasn't crossed above its 200-day yet. The MACD has topped and traveled down, which is bullish for the NASDAQ 100. So this one here is not showing the strength that the VIX has shown, but it is still in a pretty good posture. It's still generally in a bullish posture. If this 50 was to cross above that 200 and the index is traveling, going up higher, that would be signs of a weakness for the NASDAQ 100. You can see here that when the VXN came up, this is exactly when the NASDAQ 100, which is symbol QQQ here at the bottom, came down and softened up. Well, that is it for our presentation. Thank you, and I hope you enjoyed this week's episode. Please check out Conservative ETF Investor. There'll be a link for it at the bottom of the YouTube video. And thank you for watching, and please subscribe to this channel. And we'll see you later.